And we're brought to you by 24 Seconds Bar and Grill. 5 NFL players suspended yesterday for violation of the league's gambling policy. 4 of them were Detroit Lions. They include wide receiver Jameson Williams. He was among those suspended for the first 6 games of the upcoming regular season. 7-Eleven Tigers fall 2-1 to the Orioles last night. Jason Foley giving up the winning run in the bottom of the ninth after Javi Baez with a 2-strike, 2-1 RBI single in the ninth sent it to extra innings, sent it to the bottom of the ninth at least. Tiger starter Michael Lorenzen allowing just 3 hits over 5 shutout innings. Joey Wentz looking for his first win of the mound tonight for Detroit. 3-0 Kyle Gibson going for Baltimore. 7-10 right here on 97-1 the ticket. NBA playoffs, Hawks over the Celtics 130-122. Boston leads at 2-1. Knicks 99, Cavs 79. Knicks have a 2-1 series lead. Denver takes a 3-0 lead over Minnesota 120-111. Stanley Cup playoffs, Bruins 4, Panthers 2. Islanders 5-1 over Carolina, while beating the Stars by the same score. And the Kings edge the Oilers in OT 3-2. At the Ticket Update Desk, I'm Jeff Lesson for more 97-1, the Ticket or Odyssey.com.
Ready, guys? Here we go.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. What a glorious day today, and we've got a great show for you. I'm Harvey Freed. This panel is unbelievable, starting off with Harry Glantz.
Good morning. I'm glad to be back with you guys. This is awesome. We've got a great guest. We've got a great panel. Everybody out there, you're going to want to hear what we have to say this morning because the real estate market is hot and heavy right now.
Wow. Sounds like somebody's dating somebody hot and heavy.
We're playing around. We got a whole panel here in the studio. We got, of course, next to me, Becky Yaley. Good morning, Becky. We have a little headphone issue here, Becky.
Yeah,
we'll figure it out.
If you're watching it on Facebook Live, it looks like we're in a We Are the World video. We're going to take turns singing, holding one ear.
Yeah, you missed him dancing.
Lisa Lassa joins us, of course, too. We're going to be taking your calls all morning long, 248-539-9797. You can't see what's going on behind the scenes here, but what we're going to give you, of course, is an unbelievable real estate show. Special guest, Brooke Villalba. I got it straight.
You did.
I got it straight.
Wrote it down,
Realty.
too.
I wrote it down. We're going to get it out of our mouths easily today. How you doing this morning, Brooke?
I'm great, and it's Villalba.
Villalba. I mean, I phonetically wrote it down. I can't even get it straight. But anyways, this show is going to be jam-packed today. If you're just getting up to join us, of course, we're going to have sports a little bit later in the day today. There's a lot to talk about. The Lions got some stuff going on. The Tigers dropped one last night. But Harry, mortgages and real estate in Southeast Michigan, this is what's going on. Seems like it's the busiest year ever.
Yeah, I would like people to really go back and listen. Go to our website and take a listen to what we said was going to happen last December, January, and going into early February. There was a little lull at the beginning of the year, Brooke, but we said it was going to be gangbusters. We said it was going to be a record-setting year for sales as compared to what the inventory is out there. And as you know, right now, there's a serious lack of inventory.
Absolutely. And if you didn't get out in the last few months, now there's a lot of competition because people are ready. I mean, I have 4 right now that are in the process of getting pre-approved.
Yeah.
So, and I have more coming, and I have others that are waiting.
Yeah.
So, and they're waiting patiently, thankfully.
Yeah.
And, Becky and Lisa, we said, if you're a buyer out there and people are saying, well, we're going to wait to look. We're going to wait because we don't know. If you're waiting right now, you are behind the 8 ball, seriously behind, because there's so much competition out there that if your hat isn't in the ring right now, there is no waiting.
I was actually talking about this with Lisa last night that we almost take for granted how ahead of the game we are. Because these are the things that we've been talking about for months. Literally in December, we were teeing this moment up like back in December, well before people were even thinking about it, because we're always looking down the road. It's all about raising your gaze. So the ones that were looking in December, January, they were able to capitalize on it. The ones that are just now getting back in, it's like when you see a stock going down and you sell it, you missed it. Okay, by the time people are reacting, they already missed the moment of the best opportunities. So right now, we're not saying it's not a bad time to buy. Obviously, always get in it, but the longer you wait, the more competition that's going to be getting in the game. When these interest rates drop in the next maybe like 12 to 8 months, anticipating maybe if they do, there's going to be even more buyer competition out there with this housing crisis that we're in with the lack of inventory. So do not hesitate, like Harry was mentioning. The sooner you can start, the better. And with Brooke, we have a couple buyers that we're working on. I have one that I'm working on with you. And it's like they're first-time home buyers, but if it's concessions, it's really tough to get those offers accepted. So we're constantly always looking at the credit. How can we evaluate someone to get them to fit in a first-time home buyer program? Because we often find, Lisa, that it's not really the payment that people are struggling with. It's where the funds are coming from for closing.
Yeah, that's super true. I mean, everyone's, thinking, especially if you're already renting in this market, rent is super high right now. So people are used to paying rent, and the biggest issue is where your funds coming from. And often they have some of them, or they have their down payment, the 3%, the 5%, the 3.5%. They forget about closing costs. And in this competitive market, you have to have a plan for closing costs. Absolutely. Because long are the days where you can rely on the seller to pay those for you on your behalf. So if you don't have a contingency plan and you're not getting a gift from someone, or you're not seeing if you're eligible for a down payment assistance program, the fact that you're out in the market, I hate to say it, but you're pretty much wasting your time, because you can't get an offer accepted if you need, $8,000 in concessions or $9,000 in concessions because you haven't, planned for taxes, homeowners insurance, closing cost, title, and everything else that goes in it. So, it's definitely competitive, but you have to be ready. And I mean, really ready.
Go ahead, Brooke.
Well, I'd like to add, though, so, I mean, if you did need the concessions, then you need to be looking at houses that have been on the market for 30, 60 and more days, because
I'm so glad you said that.
That is the only option that you have at this point, because otherwise you're up against, right now, I just heard an agent say that they were one of 29 offers.
Whoa.
That was shocking. That was very shocking.
It's like last summer all over again.
I know, but I don't know if it was just a fluke and it was just that house, because right now I think we're seeing an average like 5, 10, and I'm sure it's going to start growing because, like I said, I got 4 buyers right now that are in the process of getting pre-approved and they're ready to go.
Yeah.
Like as soon as they get this done, they're on the ground running.
Right.
So, but if you need concessions, you got to look at what needs work and what's been sitting on the market.
Yeah, Brooke, as we spoke on Wednesday, you were on our podcast. You were great on the podcast. And as we spoke, we were talking about certain areas. We talked about Trenton. On Wednesday, there were only 28 homes on the market in Trenton. Then you brought up your stat for Wyandotte. There was X amount of homes in Wyandotte for sale. All over metropolitan Detroit, Troy, doesn't matter where it is. Okay, there's a lack of inventory on there. And if you're not in it to win it, I mean, if you don't have your pre-approval letter in hand, nobody's going to look at the offer. And like you said, there are so many offers on so little properties that getting a seller's concession is going to be hard unless that property's been on the market for a long time.
Yeah, I want to add, we actually just had a first-time home buyer, and we talked about on the podcast, too, that, we got the offer accepted. We are one of 15 offers.
Wow.
Our buyer was a veteran, and it was between us and a conventional offer. Sometimes highest isn't best. Sometimes the relationships do matter. Who's on the other side of the lending institution? Who's the other side of the agent? What is the confidence level that the agent feels? Because just because someone offers $1 million on a property, if the loan never closes, who cares? Who cares? Because it's all about how you're going to get to the closing table. But we structured our first-time home buyer as a vet to be very strong. And once we got on the phone with both agents, they realized that we were the better offer for their client to make sure we're going to get that done. And we won. We won that offer, but we might not have been the highest, I think, but it was about how quickly we could close. And the biggest thing, too, is there's a lot of misnomers about, FHA is going to get on the back burner again. And, our veterans out there that are trying to put houses on getting offers accepted, they might be passed up because there's that mentality that conventional somehow is better or cash is somehow better. And I want to bring it up because we talk about it in the podcast, and it's very important. Money is money. It's green no matter how you're doing it, how you're getting there. And our veterans are putting 0% down because they've earned that right. That doesn't mean that there's not money in the bank account. It's because they've earned those rights. And if someone is not giving those the same opportunities, because sometimes there might be an inexperienced listing agent perhaps that just thinks that maybe that offer wasn't as strong because maybe there's some chipping paint or something, but that's not the case.
I love that patriotic view. That's 1,000% the way I want to feel this morning. And when I sell my house, I want to feel that way, that I really reached out and helped another family. As a seller, you got to start looking at that. And you also have to look at the dollar amount at the end of the day. Don't tell me there's a cash offer. Again, we're at closings all week long. I asked everyone in the room, has anyone ever walked in with a bundle of cash? They said the answer is no. And those cash offers, Lise, they'd still take 2 to 3 weeks if you're doing your correct due diligence. Anyways, look, sitting on the sidelines is absurd. home prices go up. We had Dave Stevens who give us some great information. Statistics don't lie, Harry. DNA don't lie either, Harry. There's some stuff that don't lie, but we haven't seen this lowest supply since the 80s. And there's family growth, and the numbers are telling us we're 6.5 million short of homes out there.
Wow.
This inventory thing's not going away anytime soon.
Yeah.
No, it's not. And so when you hear people, so the reason why what Harvey's going to is when you hear, oh, I'm going to wait till the housing market crashes, it's not happening because of the supply and demand situation.
And it can't crash. I'm going to tell you why.
There's a
Lack
lot
of
of-
homes on the market,
Yeah.
and the average age right now is 34. Now, you take a look at the millennials that are 34. That means up to 41 and down to 27. There's such a shortage of homes, and you have all these people coming on every year by age and lack of inventory. There's going to be a housing shortage. So whoever said millennials aren't going to buy houses, A, they were wrong. We told you that. And B, if you've listened to the Hardcore Mortgage Real Estate Business Show over the years,
I want to see the receipts.
okay, right. when the market was slow back in 2007, 8, 9, we were on here telling you, hey, listen, I know it's a tough time. We told you the truth then. We're telling you right now the hardcore truth is that there's a supply shortage and there is a huge demand for this. So prices are not going down. Okay, it's just not going to happen.
My favorite is a few years ago after COVID, right? Everyone's like, "Oh, the market's going to crash at the, in the fall of 20." And I'm like, no. And then the next year, they're like, we got the same expert saying the market's crashing in 21, right? I'm going to wait till the market crashes. I heard it's going to be discounted, quote unquote, 20%.
Brooke,
Didn't
the
happen.
average
20,
Yeah, go ahead.
same happened. 22. We all heard it, right? Last year, we're going to wait for the market to crash. Well, this is the fourth year. What are you waiting for? It's not going to happen.
Right.
We've all told you it's not going to happen. The experts have said it's not going to happen.
And furthermore, Lisa, Brooke, Harvey, Becky, in the last decade, the last 10 years, the average appreciation, $122,000.
And these people missed out.
Okay, so there you go.
And
All
that's
right,
the
hey,
other
guys, we're up
factor.
against our first break. When we come back, Brooke's going to tell us all about great stuff. Buying and selling real estate, 248-539-9797. Keep it here. Alrighty, we are back live here in the studio. It is the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can catch us all at Capital at 1-800-LOW-RATE, the best mortgage banker. 1-800-569-7283 for all you folks out there that, how's those letters match with the numbers? You know, there's a new generation out there, Harry.
Well, remember when we first did it? I mean, then the phones came out and people had Blackberries and they didn't line up with the letters and the numbers didn't line up. It was crazy. But anyways.
Well, better yet, we are a valued partner in this community. Deal with professionals, and that's really what we bring you every Saturday morning. And we bring on some great real estate agents. Brooke's here to join us. I can say it a million times now, Brooke. I just couldn't get it out before. BBR Realty. But we bring you professionals. And one of the things we talked about, Brooke, and we're going to go to this call here in a minute. Hang on there, Joe. Brooke, is that passion you have helping people and stuff. And it is nurturing. We had a nurse/realtor on last week. Same type of thing. What you bring to the buyers is the sense of caring and passion. You want them to come back to you when they're ready to sell, and you want them to be successful.
Absolutely. So, and a lot of my clientele that I work with, well, I don't want to say a lot, pretty much all my clientele is referral based. So, you know, working with sellers and buyers, they see the value that I bring to the table. They know that when I'm working with them, it's not just to put them into a house, it's to put them into a home and not just sell them anything, you know? So they know that I go above and beyond. They know they get the education. There's no surprises because I hold their hand at every step of the way. So they know what's going to happen next.
I love that. You can't fake authenticity, and people are going to like smell that from a mile away. You know, who's really in it to win it for them and who's in it to win it for themselves. And when you can align yourself with someone like Brooke, that is what you were looking for. And it's okay to have a conversation with a person or two because you need to have someone that's going to be aligned with you, what your goals are, tell you what's wrong with the house, tell you what you're looking for. Because anyone can Vanna White a house, but when you can have someone that's really in it to win it, whether it's now or 5 years from now, they're here to be a part of your life. And I always say, like, I'm here to help you turn a house into a home. And I love that you said that too, because that's definitely something that I always say to people because it's important. And speaking of houses, we got Joe on the line. Hey, Joe, welcome to the Hardcore Mortgage Show.
Hey, thanks for taking my call. My question is, what's the market looking like right now in the higher range, in the $600,000 to $800,000 range, and assuming the buyer isn't worried about the financial end of it in terms of got the cash to go? Is the inventory better? Is the competition less?
I wish I could tell you that it wasn't as competitive, but it still really is, you know, in $600,000 and $800,000. And that's where the prices have gone over the last decade. Again, that $500,000 house now is $650,000 to $700,000.
Hey, Joe, what area particular are you talking about? Because they're all a little bit differently. Because there are certain areas you can't find a $600,000, $800,000 house because they're up over $1 million. So, I mean, just specifically, is there a certain area you're looking at?
Yeah, looking out a little farther. Novi, Northville, Brighton, Wixom, kind of that area.
I think they're all great areas, and I think that in particular, you're going to see Northville and Novi have gone a little bit higher. I don't think you should have a problem, finding a house or even selling a house in those areas at that price range. That's number one. Number two is I think you'll find the inventory there. You know, there's shortage of inventory all over the Metropolitan Detroit area, but I think in those areas, I think you've got a pretty good selection. I mean, I really do. And by the way, the financing for those, because the Fannie Mae Freddie Mac limit to jumbo has gone way up, you're going to have people that are going to be able to get phenomenal rates and phenomenal financing.
Yeah, and you're in a good pocket right there with that price point, to be honest with you, just because the majority of the people that are looking are in the 200 to 400 price point. I feel like that's the most competition. So when you bump up a little bit, you do kind of stand out just a tad because it's a very specific home that you're looking for, and not everyone really is blessed to be in that kind of price point. So I do feel that you're going to have a little bit more of options out there.
A little less competition.
Yeah, a little less competition, correct, for that particular price point. So we really appreciate it. Do you have any other questions for us?
No, that's great. Thank you so much. You answered it very well. I appreciate it.
For sure.
Thanks,
so
Joe.
We'll definitely reach out to you after the show. Make sure that you're getting in contact with Brooke. Make sure you have the right real estate agents involved because it all starts with a conversation, right? The best time to move and the best time to buy is when it works for you. Whether it is you're in a step-up situation, you're in a downsizing situation, right sizing, we'll say, or if you're the first-time buyer, it all starts with a conversation. And I actually had a conversation with a first-time home buyer the other day, and they're like, well, what's one or two things that you feel that first-time home buyers what's their biggest mistakes that they make, and I don't want to do that, and so I gave them two things. One,
First of all, that's a great question.
It
I
was
love
a-
that your buyer asked that question.
it was a great question, and I commended them for that, and I said, okay, there's two things. I go, one, people, they don't keep, not keeping your money in the bank. There's a lot of that happening where people are getting paid. They're not keeping the proper funds in the bank. And the biggest, most important one that I told her was they don't even try. They are afraid to have the conversation and they don't even try because they're afraid of failure and they're afraid that someone is going to tell them no. And it's never no. It's not if, it's when. It's if it doesn't work now, how are we going to get you there? What's the timeline? What works best for you? And so first-time home buyers, if you are thinking about buying, it's all about a competition, or it's all about the conversation, because we're here to set you up. We're not here to sell you. We're here to help. And whether it's 5 months or 5 years, we don't care, because we're not in it for the paycheck. We're in it to change your life.
Absolutely. So I love first-time home buyers. Those are my
Absolutely.
favorite, because those are the ones that need the most nurturing, right? Those are the ones that need the most encouraging. And that's something I definitely bring to the table with them. And a lot of them, like you said, they're scared. They think that, this isn't going to happen. I can never do this. Give an agent a call. Give a lender a call, a good one that's going to have your best interest at heart, because they are going to let you know exactly what it is that you need. And some of the things that you were scared of probably won't even be scared of once you talk to a professional.
Or something that
Yeah.
some people get nervous about, credit, or
Yeah.
where they're coming with money. And everyone knows that credit's one of my favorite topics, especially with first-time home buyers, because they don't understand how credit works. And sometimes they've made a very minor mistake and they don't realize it's fixable. There's so many things that we can fix and correct. And there's errors on credit reports, and they I sent in a letter and I told them it wasn't mine, but they didn't, provide the documentation. So it's still on the credit report. And they're like, I tried, they didn't remove it. But I'm like, but it was a really legit mistake. Yes. They just don't know how to do it. No one's born knowing that information. It's not like ingrained in us, right? Or ingrained in us.
But Lisa, we think that there are people out there that are paying $500, $750, $1,000 to credit repair services
Oh my
to
gosh.
go ahead and
Or
fix your
monthly,
credit.
$109 a month to fix your credit. They're junk. Don't do it.
Listen, our opinion is you don't need to do that. We can help you, and we do it for free.
Right.
Now, if you haven't made payments on your car payment and you're trying to get a mortgage and you call a credit repair place and say, hey, fix this for me, they can't wipe out the fact that you haven't made your
Right.
car payment.
Right.
So now if you give somebody $500 to tell you that they can't fix that, listen, there's nothing going to fix you not making payments.
You could have spent the $500 on the car payment.
Right. So what are you doing? All right. So you don't do that, and we'll go ahead and we'll show you how, and we'll actually make the calls for you and do it for nothing.
Harry, I'm glad you brought that up. Yes, if you're a client out there and you have like 565 in that mid 500 range, allow a professional to run that credit report. We run it through the credit expert. So I ran into a scenario, sure enough, last night I'm talking to somebody, and yeah, the parents have a lot of money. So when I get my hands on this credit report, they were talking land contract. I'm going to fix that guy's credit again. So we're going to fix your credit and make you become a buyer, at least get you over 580, where, Becky, you can look at FHA loans and get into the game. If your folks have some gift money, if you've got 20, 30, 40 grand, maybe we need to use 4 or 5 of that to clean your credit up.
Yeah, we call it the birth lottery money. Congratulations for
Yeah.
that. But I wanted, like what Harry was just talking about, though, is I actually just have a buyer. We got him pre-approved. Sometimes fixing the credit takes time, but it's a game plan. I've been working on a couple for like actually 30 days now, trying to get their credit in line. But they spent 2 years on a credit repair agency, and literally I looked at their credit, and within 5 business days, this is a different set of people, within 5 business days, I got their score up to 20 points, and they're out there looking at houses.
Right.
For free.
For absolutely free, because it takes a little bit extra time on our side of things, but why not? But that's why we're different than what else is out there as a lending institution, because we are experienced, we are engaged, and we're literally treating each and every single client different, because they're all different.
And don't give somebody your money when they can't do something that they say they're going to do. You can't. You can't fix not making payments. Don't give somebody $500 deposit, or even in the lending game, okay? We don't take deposit money. We don't take hostage deposit money. I would rather give somebody their money back because we can't do the loan than take an application fee that's non-refundable. We just don't do that.
Yeah, we're not. I take a lot of pride in that. And there's power in the word no, but like we were talking about, it's not if, it's when. And, we're taking the time up front to make sure that when you're out there and you're working with someone like Brooke, you're not running around with a piece of paper that doesn't mean anything, because there's a lot of that happening out there. And the reason why we know that, and I can say that with confidence, is because sometimes we're not the first call, and that's okay, but we're the second and third, and we're the last. And that means something, because if something goes sideways because someone's running around with a piece of paper that said they were pre-approved and the loan doesn't close, we're always the call, and we're going to be the ones that figure it out. And I take a lot of pride in everyone here at Capital Mortgage Funding because we have that ability.
All right, Harry, your baby boom generation wasn't as big as the millennials, that's for sure. And they're more ready to buy than ever before. This families are getting together. Ran into a guy in the gym the other day. Sure enough, his son got married. And we're seeing more and more of this. People aren't sitting around. They don't want to live in mom and dad's basement anymore. So it's just the time to take a look at it. Again, this inventory thing, it's almost like a siren that we're putting off here. We felt it in 2020 a little bit, 21 for sure, definitely last year. And we're coming up to a break. And when we come back, we'll talk about how you're going to win that offer. Brooke's going to share maybe some hidden secrets out there. 248-539-9797. We'll be back.
And we are brought to you by the good people at Twin Peaks. 5 Condom NFL players suspended yesterday for violation of the NFL's gambling policy. 4 of them were Detroit Lions. That does include last year's Lions first-round pick, Jameson Williams. He got a suspension for the first 6 games of the regular season. Tigers fall 2-1 the Orioles despite solid starting pitching. Michael Lorenzen allowing just 3 hits over 5 shutout innings. It'll be Joey Wentz looking for his first win of the year tonight. Against 3-0 Kyle Gibson for the Birds, 7-10 right here, the first pitch, a 97-1 the ticket. NBA playoffs, Celtics take a 2-1 series lead. Actually, the Hawks won their first game, 130-122. Knicks go up 2-1 over the Cavs with a 99-79 win. Denver 120, Minnesota 111. Nuggets have a 3-0 lead. Stanley Cup playoffs, Bruins double up the Panthers 4-2. Islanders 5-1 over Carolina. Wild beat the Stars 5-1. And the Kings edge the Oilers in OT 3-2. At the Ticket Update desk, I'm Jeff Lesson for more 97.1, the Ticket or Odyssey.com.
Alrighty, we are back. It's the Hardcore Mortgage Real Estate Business Show in our 23rd year. You can find us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Give us a call here live in the studio, 248-539-9797. Harvey Free, Becky Ailey, Harry Glantz, Lisa Lawson. We're giving you all that mortgage information. Brooke Villalba, it's so easy to say. BBR Realty. Brooke's wonderful. And we really appreciate you coming on again. Again, if you want to join the show, 248-539-9797. Brooke, I always talk to agents, and we try to separate ourselves, like those great agents out there. And a couple of the things, like all this knowledge when you're buying your first house, we talked about a little off the air. We saw, these property taxes, sort of discussing that with your clients. But don't you even dive deeper? Association fees, future millages, think they're going to be building the Walmart over there at that subdivision, might add some. There's a lot to know about purchasing your first house.
Absolutely. Absolutely. I agree.
Isn't that the difference? Isn't that the difference between being transaction oriented and relationship oriented?
This is all about relationship for the most part. I mean that's where it starts
And
anyhow.
I think it's important to work with someone with integrity.
Oh,
Besides an experience, because especially in this market, we saw a flood of, like I'm sure in your business, a flood of new agents come in, right? Because it was going so crazy. All these new agents came in, thought they were going to do it.
thought it was easy.
Right, it was easy. And the other day I went to call someone, and I got a message back saying, I have to call you back when I'm done. He was at work. He works still at a big coffee place till 6 o'clock every night. And I'm like, how are you doing, the best business for your clients if you can't even return a phone call until after 6 p.m.? How are you showing houses as the agent? You have to work with people. This has to be your full-time job if you want to do it right.
Only if you want to do it right. Only if you invest in
Correct.
yourself. You have to go ahead and you have to cast everything else aside, and you have to
work with
jump in it,
integrity
and you have to
passion for
be
people.
100% in it. You cannot do something very well part-time.
No, you
Right.
can't. And, in the beginning of the year, we talked about that this market is going to be back to basics. This is a skills-based market for the real estate and lending professionals. You cannot fake it till you make it. And, because people got in thinking that it was easy, well, congratulations if you made it this far, because the reality is that 30% of the agents have already either not closed a transaction, or they're completely out of it already because they were the part-time agents just throwing it in there to sell to their relatives. The other 60% are struggling, but what's left is the 10% that are dominating, that are really still making the money, making the waves, and making sure they're hand holding their clients. And you're part of that, because it's not just about the money. It's about the relationships. We are in a people industry. We're people-y, right? And, you have a lot of technology out there, but technology is never going to replace you.
You got to care.
Yes. It's
You
never
got to
going to
care.
replace you.
It's not about the paycheck. I mean, it's nice. It's a bonus in the end, but no, it's about the people.
And you can't let money drive you, because I feel that's when people start getting in slippery slopes, right?
Yeah.
You have to have a compassion and a real drive and love for what you're doing if you're going to do it right. And I think sometimes you have to tell the person this. I don't know if this is the right house for you. You said these 3 things aren't quite right. You're not trying to put a square peg in a round hole.
There you go.
Sometimes you have to just look for a different hole.
Right.
And so where's the hole? Right. But I mean, as an agent, that's what you do, right? This isn't the right house. This isn't the right, and you keep looking. And I think sometimes when there's such a shortage, people get desperate. They start doing things out of desperation. And I think the biggest thing that you can do is work with, experienced professionals and those with integrity, and give yourself time. So if you have to move in 60 days, you probably should have started 3-4 months ago, because this market is a little more difficult. So give yourself the time to get it done right.
I was going to say, Brooke, I'd rather have the buyer out there call you and get hooked up on that portal right away instead of clicking buttons online. When you're doing that, you become the lowest common denominator. You're the lowest common brain. Don't be treated like a number out there. This is a message for everyone. Don't click buttons online. You're going to have a whole bunch of bad strangers giving you phone calls. Now, I'm not saying that you might get one qualified person to call you. Maybe not. Don't do that. Get on the portal. Those whatever that company that starts with a Z or whatever. It's goofy. They lost like $5 billion worth of homes just 3 years ago, but people are still clicking those buttons and calling them.
They don't know any better.
They just don't.
They
Because
steal
they
from
have
us.
a great marketing plan. That doesn't mean that they have a great business plan.
Exactly.
Turn yourself into a professional buyer. We'll get you hooked up with a
Or great
professional
marketing
realtor.
company, and
Yeah.
It's not the same as a real estate.
All right, we're going to go out there to Robin out there. Hey, Robin, thanks for calling in the show. 248-539-9797. Robin, you made the call. Go ahead.
Good morning. Thank you. I have a quick question for you. I was wondering if there's any creative ways to get equity out of our home besides refinancing.
Well, how much are you looking to take out?
Maybe $50,000, but we have $300,000 in equity.
Okay, and is it for home improvement? Is it for paying off high debt? I mean, high credit card debt. I mean, what's the reason for it? I mean, if it's personal, you don't have to tell me. I'm just trying to get to the bottom line.
Yeah. No, ideally to pay off some debt, but it was
Okay.
from home improvements and miscellaneous.
All right, so you don't want to refinance. What's your current rate, and what term do you have on your current mortgage?
We have a 3.4% interest rate. It's a 30-year fixed mortgage.
And what's the balance
and we
on
have
that?
$350,000.
Okay, so we would have to take and run the numbers because you might be right, and doing a cash out refinance might not be the best thing for you. There might be other things too. And if you took out a home equity loan, though, that's a variable rate. That rate's going to continue to go up. So what I would suggest is that we take a look at and do the math, and then we'll figure out, because the math doesn't lie. We'll do the numbers. There is a calculation, and there's how long do you plan on staying in the home, and all those kind of things, and we'll have to value the home. I know you said you had $300,000 in equity, but I think that it's not as simple as saying, what should I do? Should I take a home equity loan versus cash out refinance? Because there's a method to our madness, and the numbers won't lie, and then you'll get to make the choice.
I appreciate it. The lender also said that a home equity loan is not an option, and the only option we had was the refi for the cash out.
Well, that's because they
They don't
offer home equity loans. So
they don't offer the home equity line of credit. That's why they said that, because obviously they're trying to make a paycheck or whatever.
Right.
But the reality is that we do second mortgages, but at the same time, if we're going to compare our rate versus what else is out there, and we're also going to advise you on what's going to be the best situation. But to Harry's point, is when you're hearing about the Fed funds rates going up and et cetera and all those things, that is affecting the equity lines of credit right now. So that's when he's talking about, we're going to run the numbers and we're going to say, okay, if you did do a cash out refinance as a straight refinance, this is the numbers versus what it's going to look like as an equity line, to make sure that you're not kind of expending all of your equity too. So I really appreciate this phone call, because this is a question that comes up often for people that are wanting to make these improvements to their homes, but you have a really good rate that you want to hold on to, and that's totally legitimate.
I want to add to that too, because a cash out refinance obviously is going to be a slightly higher rate than a regular purchase. But what people don't know, and you've already done your home improvement, so this would apply to your situation. But if you haven't done those home improvements, you can do a renovation refinance. People do not know that you can do a renovation refinance loan. It's not viewed like a cash out. It's a primary residence, and you can get your work done and do it as a single transaction, still have one mortgage payment, and that rate is lower, just like it's almost like a purchase or a regular refi that you're not taking cash out. So there's other ways to, what I like to say, skin the cat, which isn't really a nice saying, but there's other ways to get it done, and you have to be able to think outside the box. And yes, renovation loans are a little bit more work for a lender, but for me, I love them, and I think it's another way to offer value to somebody and make sure that they're in the best position for them.
Yeah, and also what we'll do is we'll go ahead and we'll suggest other ways to do it, and if it means going ahead and calling somebody else to do a home equity loan, we'll do that too. We're here to help people out. I mean, it's not the reason why that other lender said, let's just put it out there. I'll take the hate mail. You can email me at hglans@lowrateonline.com. I don't care. All right. The reason why that other lender said do a cash out refi is because they want to go ahead and they want to make money on that transaction other than being relationship oriented and giving somebody the proper advice. It might be hold on to that lower rate and go out and get a home equity loan. It might be, but we won't know because we want to take the time
Crunch
and do the math and just see what's going on, and then we can properly advise somebody. So no, it's not. It's not a one size fits all.
There's power in the word no, and I describe us as we're the backseat driver that's going to talk a lot. We're going to give you the best options. We're going to tell you how to get there, but at the end of the day, it's your decision whether you turn right or left. And we're going to give you the best, what we feel is the best direction for you to turn. But at the end of the day, it is your financial situation, and we're going to give you the two best options that are for you, even 3, 4 if it comes to that. But ultimately, it is your decision, and you need to make sure that we're always putting you in the best position, but you're also putting yourself in the best position too.
Yeah, that's a great call. That just shows what's out there. That's Now she's getting me all jacked up. That's what just shows what's out there in the lending community. What that lender should have said is exactly what we said. Hey, let's run the numbers. Let's take a look at it. No, you have to do it this way.
Do it this
Anybody
way.
who tells you have to do it this way, I don't know. You got to run away from them.
Different motives. Yeah.
Harry, I want to thank those type of lenders out there. I closed 3 or 4 families in the last couple months who were rejected by those people.
Right.
Supposedly 5-star lenders don't even know what they're talking about. Hey, look, if you want the real
Whatever.
truth, keep it here. We're up against a quick break, but it is the Hardcore Mortgage Real Estate Business Show. So when we come back, more hardcore information helping you become a homeowner. 248-539-9797. We'll be back. Alrighty, we are back. It is the Hardcore Mortgage Real Estate Business Show. Give us a call, 248-539-9797. We always give you great information. There's no BS here. I'm sorry, it's hardcore information. Trying to get you off that portal. Get you onto a portal and get you clicking buttons. That clicking button things is getting so many families in trouble. Eventually, I don't know, they stumble upon the great real estate agents like you, Brooke, and it really makes home ownership fun and exciting, and that's what we want people to do. Anyways, we do have a lot to talk about. We're going to go to call here. We are going to be talking about loan level pricing adjustments. It's not real sexy, but a little change in the mortgage industry. We'll try to keep that exciting for you. But let's go out to Ron out there. Good morning, Ronald. What's going on?
Hi, good morning.
Morning.
Go ahead with your question, Ron. Yeah.
I came in kind of late this morning, but I wanted some answers about some refi options that you may be able to give me.
Okay. What are you looking for specifically? Are you looking for some cash out? Are you just in a bad loan situation? You need to get out of that. What's your agenda?
No, I own the house outright.
Okay.
I don't owe anything on it, but I just recently retired. And the home that I'm inquiring about, it's kind of always been a fixer-up situation. But I'm trying to, what I want to do is move in that home, and I'm in the process of doing that now. And that way, I don't have a mortgage or anything. I just sold a home I was living in.
Okay, so you're talking about this was a home that you had for some time. You weren't living in it. You sold your primary, and you're looking about occupying this property that might have been an investment property that needs to be fixed up. Is that what we're talking about?
Yes, it needs rehab. Yes.
Okay. Yes. So that's definitely something that we can reach out to you after the show and talk to you specifically about what your goals are. Obviously, with you being on a fixed income now, you make what you make. It is what it is. And we need to make sure that you're not being overextended with your complete debt load. We want to make sure that whatever payment you're getting after you extract the equity out of the home to fix it up, to do what you need to do, we need to make sure you have a payment that you can afford. So where are you currently living right now?
I just moved from Southfield. We just closed on a home that I owned in Southfield, and now this home I'm specifically talking about is in Inkster.
Okay, are you living in this house, or are you renting somewhere else?
No. I just actually moved in yesterday.
Oh, I see what you're saying. Okay, perfect. So that will be your bona fide primary residence. So
this is the perfect example of the renovation refi.
Yes.
Instead of doing a cash out.
Yep. So this is definitely something that we're going to call you after the show about. We're going to get really specific with you and find out what's going to be the best situation for you. I'm looking forward to it.
All right, thanks for the call, Ronald. No doubt about this. Hey, look, Lise, again, hardcore this morning. I'm sorry, I got a little sweat coming off my brow here. Yeah, look, we get the calls all the time here. There's no doubt. I want to help this guy. I hope the numbers. If it's a real rough property, it's going to be tough. Again,
well, that's why that renovation.
Yeah,
refi works.
And again, it's hard to get contractors now. It's hard to get bids on properties. That's why the renovation loans are a little bit tougher. So we have to dive in. Now, I'd love this if he tells me that the house is worth $100,000 in today's market if it's fixed up, because he doesn't owe anything. And if we're able to give him 40, 50, 60, again, no one's getting rich on this end of things, but we're helping him. He's going to make a great house. He's going to rehab a house in our community. Great. Maybe there's an opportunity there. It's not for everybody, but maybe there's an opportunity there. And boy, oh boy, I took another call last night and I asked the first question. I go, so what's your income? Where are you working? She didn't have a job. So yes, folks, you got to have some income coming in. You don't need an employment. Of course, Lise, we know all sorts of other ways of having employment. You can have Social Security income coming in, alimony and child support. There's lots of other income avenues.
Long-term disability can qualify. I mean, there's a lot of different types of income that can qualify to help you get into the home that you need.
Yeah, so that was a fantastic call. We're looking forward to it, to reaching out because, again, fixed income, that doesn't disqualify you, but we need to make sure that you are set up for success, especially in the current market. If you don't need to sell or you don't need to buy and you can fix up your house, let's talk about it. And the other thing that we really need to talk about is the recent media noise about the loan level pricing adjustments. Again, we talked about this months ago on the Hardcore Mortgage Show, months ago. So this is old news to us that recently just got in, the media got their hands on it, talking about how, your higher price point credit is going to be, $10 dinged over your first-time home buyers with lower credit. The reality is this, is that 20% down has never been the best interest rate. Never, ever, ever in the history of ever, even before these loan level pricing adjustments came out. What is a loan level pricing adjustment? When you're calling around saying, what's your rate, what's your rate, what's your rate? And if someone just slaps out a rate to you, they've already been lying to you, because there's so much more that goes into what's the interest rate, because we need to know, is the property a condo? Is this a cash out refinance? Are we buying a property? Are you a first time home buyer? Are you not a first time home buyer? Are you going to put taxes and insurance?
What's your credit score?
What's your credit score is the biggest thing.
What's the property type?
There's a million things that go into what an interest rate is, other than you just calling around because people don't know what questions to ask.
If your lender is not asking you many questions, okay, if it sounds like that we're being nosy, we have to ask a lot of questions so we can ascertain the proper answer for you
and give you a correct answer.
So if you go online or you're just making calls and somebody quotes you a rate without asking you 7, 8, 10 questions, you are not getting accurate information. Anybody can quote a rate. Then here's what typically happens. You go online, then you see a rate. It says 2%. Okay, first of all, you know it's not true. Second of all, it says 2%. And somebody calls you back and says, okay, give me $500, I'll lock you in at 2%. Then they start asking you questions. Wrong. You've already given them the money. You're not getting that back, no matter how much you complain, because you clicked a button that said, hey, I'm not getting my money back. And then you find out that rate isn't 2%. It's really 6.25 with a point, because your credit score is 645. Okay, so you got to stop. There's an order to this. So we're going to ask you all the questions that need to be asked, and then we dive into it, and then we give you a rate based on your particular situation, because your situation is not the same as everybody else's.
Right. And now the biggest thing that I want to talk about, though, regarding this is these what's happening about how like 720 FICO score buyers, or somehow they're getting dinged and they're getting higher interest rates than your first-time home buyers. It's not exactly true. What they have structured this loan level pricing adjustment, whether we agree with it or not, is to help first-time home buyers get in situations for affordability, because they are getting through the ringer in this market. They're trying to get the first-time home buyers out there now.
And into actual homes.
And into actual homes, correct. Now, the person that is has better credit, experienced credit, you're going to get that same pricing adjustment, but maybe not at the 20% down. Maybe it's going to be equivalent if you put the 10% down versus you wanting to put 20% down. The interest rate is going to price out better for you. And that's what they're not talking about that on the news.
It's more of a shift. Yes. You know, it's more of a shift. And I call it clickbait. I mean, all we hear in the past, like for me this week, and I called Becky the other day and I said, are you having clients call you? Because my phone is going off the hook. Because someone that I knew had put out on social media that there's going to be all these dings effective May 1st. The reality is this is already in effect. Because this is in effect for loans being sold to Fannie and Freddie. Which means if you are currently in the transaction, you're already locked and your loan's going to be sold. This is already in your pricing. Nothing is going to change. This is not new.
All right, I'm going to summarize it. Just a quick little thing.
Right.
What you can control is what you need to control. So that's your debt to income ratio, which is really important. Get your debts under control. I'll work on your credit score and call professionals like us at Capital Mortgage Funding. Most of the folks out there listening who shop interest rates don't even know what a discount point is. I'm sorry to tell you that. So we're here to educate you. Let's keep that going in the right direction.
Hey, Brooke, wait, I want to ask Brooke a question before. It's going to be a very easy question for you. Brooke, how do you feel? Because I can tell you how I feel when I get calls. Somebody's clicking around on the internet and they find a lender and they see this. How do you feel when somebody says, well, I've been clicking around the internet, and then they finally call you? I think the internet's good for, if I want to buy a pair of vintage Air Jordans, or I want to get a baseball card, okay, or whatever it is. But it's not for financial and real estate transactions, Brooke.
No, if you listen to the noise that's out there, you're going to get full of noise. Yay. I mean, you need to talk to a professional that actually knows what's going on with the lender, with the housing market. No, it's not crashing. It's not going to crash. It's just not. Is it tough? Yes, it's tough. But also, when you're looking at the Z and looking at all of those, those websites, they pull from us. They steal our data. Oh my God. Okay. Great. They steal our data. We pay for that. They steal from us.
I'm so glad you said that. If your clients and our clients are in someone else's database, and if you're not reaching out to them, someone else is, and the unfortunate part of it is that they get lost in the sauce, and sometimes they don't know any better, or they don't want to reach out to you. Call Brooke, no matter what time of the day, no matter what is happening. Don't just go around clicking buttons, because when you feel like your phone is listening to you, it's because it is.
It is.
And if
Yes.
you click on something and it's following you everywhere you go because you strayed away from Brooke, and now the phone's telling on you.
Yeah.
Now, to wrap up just real quick on the loan level pricing adjustments, call us at Capital Mortgage Funding. We will debunk the real information, artificial versus real information.
And it's free.
And it's free.
You don't pay us for anything.
Don't listen to the fear mongrels right out there. Yeah.
This is not new.
Have we got a call? Do we have a call?
We actually are going to not take any more calls for the rest of the show just because we lost our call, but that's okay. You're going to call us at Capital Mortgage, 1-800-LOW-RATE for the rest of the weekend. Wait a minute. That music says we're out of here? Are you kidding me?
No way. Brooke, you were fantastic.
Brooke, I need another hour with you. We're just getting warmed up.
Well, thank you for having me. And if you have any questions, I'm more than happy to answer them. You can reach me at 734-686-7017.
And Brooke, there's nothing like AC/DC at 10 o'clock in the morning. I'm just saying.
All right, hey, we got Pat Caputo coming up. He's going to talk NFL draft, the Tigers, and a 6-game suspension. Are you kidding me? All right, keep it here on 97.1. We'll see you next Saturday.
Leave it till the Lions.